Let's take a look at this chart because there's a lot of things going on here that you need to understand. So basically, we're looking at the CoinDesk Bitcoin Price Index, the XBX. So let's take a look at that. And what is this? What is this showing us? Well, at first glance, this looks like a standard crypto consolidation. But as we dig into the structure, the timing and the magnitude of the move, a very different story is going to come through. And I want to start by saying that I am here to educate you. Now, the Black Swan channel is here for you. It's here for you to understand what is going on in the market. And more importantly, right now, it's here for you to understand what's going on with Bitcoin. There's a lot of things happening, and you need to understand it. Why you need to understand it? Well, because if you want your Bitcoin enthusiast, and in fact, if you could see behind, you could see the cryptocurrencies. They're very important. It's a bit good ways of making money. So let's try to explain to you. Give me a few minutes, and explain to you what it is that you're looking at. Okay, so what we're seeing on this chart is a Bitcoin price comfortably around 90 to 92,000 for several days heading into late November. So this region has become kind of a, what we call a stability band. Not a flat line, but a healthy sideways, typical of a market waiting for a catalyst. So basically, the market doesn't know what it's doing. It's kind of moving back and forth. And so what's going on with Bitcoin? For almost 48 hours, right? Bitcoin traded in a narrowing range with just a brief spike above 92,000, likely driven by short-term liquidation, automated trading strategies, or maybe some leverage long interest. But that spike failed, and that is what you need to understand. And if you look at it, right, and failure at the top of a consolidation zone is often the mark of a first warning signal. What do I mean by that? Well, after the attempt to break above the 92,000, the price quickly sent back into the same band. This isn't dramatic. Bitcoin is known for false breakouts. But however, what is important is a character of the pullback. The recovery attempts became weaker. The highs started to step down. The low crept closer to the bottom of the 90,000. This is a classic, what we call a distribution behavior, where large holders may be offloading gradually while the public believes prices are stable, which is always the case. And this is what I created this channel. I want them to stop taking advantage of you, right? I want to make sure that they realize that you know what you're talking about, right? You need to understand it. So basically what's going on, the market is quietly losing energy. And then, of course, the breakdown, as you could see. You could see right there that basically right at the chart shifts into the December area, Bitcoin falls off a cliff, dropping from around 91,000 to 86,000 almost instantly. This is not a normal dip. This is a structural unwinding. So the vertical nature of the drop suggests a liquidation cascade in leverage long positions, automated selling for margin calls, a sharp reduction in liquidity, possibly a macro headline that hit during the low volume hours. And I know these are not easy concepts, but that's what I'm here for. Right? I'm here to kind of help you, educate you. Give me some time, and you'll kind of understand what's going on, and you'll take advantage of it. Bitcoin doesn't immediately bounce back. Instead, it grinds even lower. And we see a dip all the way down to 82,000, making a loss of nearly $10,000 from the breakdown levels. And if you see where we are now, you could take a look And you're seeing that this is not exactly what we're looking for here, right? We're having, there's a bit of red, as you could see, with all of the, the cryptocurrencies. Cryptocurrencies are not doing well right now. Take a look. These are live. Live shots as I'm doing it right now, recording it. You could see what is going on, and I think it is a bit of interesting situation. Now, of course, you don't have just to buy bitcoins. There's lots of cheaper ways to get into the crypto world. Obviously, the thing is you want to make sure that you have a good way, right? To the proper ways to get in there. But I mean, if you take a look at the crypto, look at this. I mean, you have Bitcoin at $92,000, but you've got Ether at 3,000, Binance 893, Solana 141, Ripple, Polkadot. But the point is, when you look at all these numbers, you could see that, frankly, for the month, they're all kind of red. For the year to date, a bit tough. Year over year, really rough, right? So, that's the idea. What's going on with Bitcoin? So let's keep going. And let's talk about it. So the nature. So basically, you understand the chart is going down, right? So in percentage term, we lost about 10%. Okay. So month to month, we are down 8.9% month to month. It's a lot. If we keep going like this, we lose all of it in 1 year. So the behavior. So here's where the psychology becomes fascinating. After reaching the low of 82,000, Bitcoin begins to a choppy recovery. First bounce back towards 85,000. Rejection, second bounce, more turbulence, and then a more sustained attempt to climb back to 86,000, which we did. This pattern, jagged, unstable, uneven, is characteristics of markets searching for new equilibrium after a liquidity event. Think of it like a rubber band snapping back, but wobbling afterward. It's not controlled buying. It's opportunistic buying mixed with forced rebalancing. This type of action tells us that the market has not yet regained confidence. So what is causing this red line with cryptocurrencies, right? Well, one, leverage unwind. If long leverage had built up during the consolidation, then any sudden drop would trigger a waterfall of forced selling. People leverage their position to be able to take advantage of the market. That's for stocks, but it's also for cryptocurrencies as well. A liquidity trap. Right? Holiday periods and late night trading windows reduce liquidity, amplifying the moves. 3, macro trigger. Even unrelated macro event, the treasury yields, Fed statements, we know that's coming pretty soon. Regulatory hints can cause knee-jerk reaction in crypto. Number 4, exchange-specific issues. Sometimes a major exchange or market maker experience outages, liquidity withdrawal, or unusual flows. Whatever the exact spark, the chart shows a reaction with immediate, violent, and systemic. It's something deep. So is this a top or just a correction? Well, here's a big question. If this is a local top or simply a healthy correction, let's evaluate. Let's take a look at it. Well, evidence suggesting that this is a temporary correction. One, the market did not fully collapse, right? In fact, we are back to 92. Buyers stepped in around 82,000. The recovery begins quickly, showing interest and participation. It's not a meltdown. That's a good sign. No further breakdown occurs after the first shock. So these are the evidence that it's a temporary correction. But could it be a potential top forming? This is it. You're not going to get above 92. Well, the failure at 92,000 shows overhead resistance. The breakdown was too sharp for a normal correction. The rebound lacks strength, indicated confidence is not restored. Lower highs are forming even in the recovery phase. This points to a market undergoing a cool down. It's undergoing a cool down after an extended run. Is this going to keep on going? We shall see, but this is what we're seeing right now. Number 7, I would say that what you need to watch out for is critical support zone. And of course, when I'm talking about that, right, I am talking the fact that, you know, all of them are also kind of, the cryptocurrencies that just follow the lead. Don't forget, there's about $1 trillion of market cap out there on Bitcoin. So this is huge. So the critical zone I think you need to look for is around 82,000 to 84,000. If Bitcoin loses this zone in coming days, the next leg down could accelerate dramatically. That's what you need to watch out for. Careful. Immediate resistance, 86 to 87,000. Bitcoin needs to reclaim and hold these levels to rebuild upward momentum, which I think they have done so far at 92,000 today. Major resistance, it's around 90 to 92,000. This is a region where Bitcoin failed to break through, and this is where we are now today. It will likely serve as a ceiling unless the market receives a strong positive catalyst. So big picture, I think that the chart shows a story of a market that was stable, attempted to break out, failed, experienced a deep liquidation event, and now trying to find its footing. I mean, I don't think it's a bullish continuation or a confirm bearish reversal, but it's transition. But historically, I will tell you that the Bitcoin has shown after major liquidation events, it often consolidates for days or weeks. Sharp declines can precede equally sharp rebounds, so there's an opportunity there. But prolonged failure to regain the prior range leads to deeper correction, right? Because you're saying, you know, it's kind of the snake that bites its own tail, because you're saying, well, we're at around 92,000 and we were almost 100. You know, and so why can't we reclaim that? Well, because we're not able. Well, I guess if nobody wants to buy, then I shouldn't be buying that. You know what I mean? It's very I mean, stock price is very psychological. If you don't feel the interest, then you figure, well, nobody's interested, then why should I hold? And Bitcoin is a funny little thing because, and all the cryptocurrencies as well, is that there's a finite amount of cryptocurrencies. Lots of them, but there's a finite amount. You know, you can't print any more Bitcoin. This is it. You could mine them mathematically, but you can't create them. And that's the beauty of it. Plus, it's it's safer than you think because it's based on blockchain technology. So the human side of the chart, I think, look closely, you can feel the emotional waves in the chart. The optimism near 92,000, the frustration, the shock of a sudden drop, the panic selling. Right? That's a concern. There's a bit of a panic selling happening, and the shock at around 80, the cautious dip buying that follows. The market is a perfect example of a market psychology in motion, and this is very important for you to understand. Is that the stock market, even though it feels very complicated, it feels very, it's all about numbers and calculation. Well, not really. It's about psychology. Now, if you know the psychology, if you understand the psychology, which basically I'm trying to explain to you right now, which basically is saying that we were at 92, 100, we went down to in the 80s, and then we were able to recoup. That's a good sign. But are we gonna break out to the 92? Because if you break to 92, then you're having a good day. And keep in mind, when I'm talking about crypto, right? When I'm talking about Bitcoin, I'm talking about crypto in general, because as you can see, all of them are kind of following, right? All of them are following what is going on in the market. As you can see, 92,000. So I think that's a way to make money as well in crypto. Because remember one thing, the advantage of cryptocurrency is because you cannot make any more of it. And it's very safe in terms of you could track all the moves and everything that's going on with your currency. Now, of course, there's a lot of meme coins, and you have to be careful. Solana being one of them. It's a meme coin, but Solana is used heavily by creating. I mean, that's how they, believe it or not, that's how Russia was able to do a lot of capital raising, believe it or not, through cryptocurrency. But it's not like the financial market itself is any safer, right? Have you ever seen all the currencies that went into Target, for example, not too long ago? We lost all of the, very often you hear, oh, we lost all the data from the customers, or the consumers, all your credit card information, all your social security, okay? So don't be fooled that, oh, crypto is for drug dealers and everybody else should stick to the usual banking system. No, it doesn't work because it's not that safe. So don't forget that Bitcoin is not just a digital asset. It is a live crowd psychology experiment unfolding in real time. That's how I look at it. So the takeaway, this tells us that Bitcoin hit resistance. A large-scale liquidation even triggered a steep decline. The market is trying to stabilize right now. Right now, as we speak, the market is trying to stabilize, but has not yet reclaimed lost confidence. Remember, we got all these people trading this thing day in and day out, day in and day out. All these people's mind at the same time are kind of converging towards the same goal. And that's amazing if you think about it, that all these people are kind of figuring out what is the value. Because you don't own anything technically with Bitcoin, right? A stock, you own a share of something. But Bitcoin, you don't own anything. But yet it has value. So whatever happens next, the setup forming right now is a kind that precedes major shifts. So I think that at the end of the day, what's going to happen is this thing needs to find a foothold very soon. Otherwise, so be careful. And then, of course, you've got the Fed coming up pretty soon. So let's take a look now at what I think is really happening is the decoupling story. And what do I mean by the decoupling? So take a look. Take a look at this chart. Okay. Take a look at this chart. There's a bit of a decoupling going on here. And it's important to understand it because it tells a story. So what is it? What is the story that's telling you? Well, first of all, there's a decoupling of Bitcoin from the NASDAQ Composite Index. Look at it right in front of you. For years, Bitcoin traded as a high beta version of tech stocks. And but now, as this chart shows, we are witnessing a clear break in that relationship. And the consequences could reshape how investors think about how crypto is pricing risk. So let's break it down. Let's take a look at it. Wait, what are we talking about? So on the screen, we're looking at the chart from Apollo illustrating the NASDAQ Composing Index. Okay. And you could see for most of this 3-year period, for most of the, you could see the orange is for the NASDAQ and the green is for Bitcoin. And it's a tight correlation. They're kind of moving together here. They're moving together. They rise together. They fall together. They bottom in late 2022. Then they recover through 2023, 2024. This correlation. I don't care if you believe in it or not, if you don't believe in it, but it's happening. So this reflects what markets have shown and traded on. Bitcoin behaves like a speculative tech asset. Highly sensitive to liquidity, Federal Reserve policy, and risk sentiment. And I guess the question, of course, is it going to keep on going? So by starting in mid-2025, right? You could see something breaks. The NASDAQ continues to green upward. It's grinding, hitting fresh high into the fall. Bitcoin, however, peaks earlier. What's going on? Then falls sharply, dropping tens of thousands of dollars while the NASDAQ remain relative resilient. So what I wanted you to do subscribe to this channel, right? A little bit of a commercial on my end here. Do subscribe to the channel. Why? Well, because I'm explaining to you what's going on with Bitcoin. I deeply believe that you need to be educated, or at least taught what's going on and shown the other side of things. Because frankly, the big guys, they've got a hedge on you. They've got definitely have a hedge because they've got the tools, which you don't. And again, Bloomberg and all these are not tools. The newspapers, they're all biased. Right? You need a non-biased view. And unfortunately, in social media right now, everything is kind of one way or the other. That doesn't help you. It helps them because you're watching. It gets them eyeballs, but it doesn't help you. Because right now, which one you figure out is, should I get into Bitcoin or crypto? Because there's a bunch of other, unless you have $100,000 to spend, although not 192,000, but there are other opportunities in the cryptocurrencies, and you can make a lot of money, but you have to know what you're doing. You have to understand it. So right now, what we're talking about the fact, and don't forget to subscribe, and you can also join my Patreon channel as well. Give you actually specific recommendation. So there is a decoupling. Started in mid-2025, there's a decoupling. It's evident, as you could see. What does it mean? Why is this unusual? Well, historically, Bitcoin and NASDAQ is rare. There are only 3 other major moments when correlations collapsed. In late 2017, let me show that to you. In late, as you could see, in fact, you could see in late 2017, during the retail-driven cryptomania, if you recall, in March 2020, during the COVID liquidity crisis. What do you want? COVID. In mid-2021, during the China binding ban and the Fed taper talk. In all 3 cases, a major structural force, either liquidity regulation or leverage, was behind the divergence. So when correlation breaks in 2025, the natural question is, what changed? What is going on? What happened? Well, is Bitcoin responding to what equities, to something that equities are not? What's going on? Well, let's focus on the Bitcoin moves. From the chart, you could see that Bitcoin stops around $140,000 to $150,000 in mid-2025. But then after that, it starts to come down quite a bit. Momentum rollover, buyers dry up, and a steep downward trend forms, hitting roughly $90,000 to $100,000 zone. This is not a minor correction. This is a full-scale deleveraging event, likely triggered by several overlapping forces. So what's going on? Well, number one, you've got regulatory battles that's intensifying, and that you should be aware of. U.S. agencies like the Treasury, CFTC, SEC increased scrutiny around stablecoins, reserve attestation, and crypto banking relationships. Whenever Washington steps up enforcement, Bitcoin loses some of its risk premium narratives. Bitcoin needs to be free. It's like a Mustang, right? Once you start putting fences around it, like the previous administration did, that becomes tough. Number 2, you have an ETF outflows and profit taking. The spot Bitcoin ETFs, which fueled the huge surge earlier in the year. Now, ETFs are exchange-traded funds. They're basically like stocks, but they're more like mutual funds, but they trade like stocks, which are great ways to get into crypto, believe it or not. But so they fueled a huge surge earlier in the year, which begin to see net selling, forced redemption, and rotation back into traditional assets, getting the money out. That alone can drive a massive mechanical decline in price. Number 3, rising real yields. Even if the Fed stays on hold, real yields rise as inflation cools, making risk-free asset more attractive relative to speculative crypto. I mean, right now, you get 4% risk-free. Right? Now you're losing 10%, believe it or not. So why is the NASDAQ still rising? Well, the NASDAQ still pushing higher, even Bitcoin rolls over. Well, first of all, the AI boom keeps tech elevated. And if you take a previous... take a look at one of my previous live, and you will see that I talk about the fact that if you look at the tech, you take a look at the tech 100, it's following very closely the previous bubbles. But there's more to go, a lot more to go. So you have the AI mega caps, NVIDIA, Microsoft, Amazon. They continue to post strong earnings. Capital flows concentrate into big tech because it's where margins and growth forecasts remain strong. People want to be with the strong companies. This is not the dot-com era. I mean, NVIDIA and Tesla and these companies, Oracle, I mean, they have real products. They're making real money. They have real investments. Now, of course, there's a big question is, you're spending too much money on AI and maybe it might not be worth it. Well, they're looking and searching for a solution and they will find it. So this supports tech multiples even if the Fed pauses. Tech earnings don't rely on leverage like crypto does. When liquidity tightens, Bitcoin drops faster because its ecosystem depends heavily on leverage, derivatives, borrowing, and dollar liquidity. Big tech does not. Number 4, with the foreign capital inflows, with political instability rising in Europe, China, emerging markets, institutional money flows into U.S. equities, particularly technology. Why? Because this is where it's safe. You want to put money safe. I mean, what's going on right now in Ukraine? Well, we're trying to find a peace deal. Well, yeah, but Europe is pushing quite hard. And Russia is pushing back. And things are escalating, right? And they started the military service in Europe now, in France. I mean, what? They're going to spend lots of money. So people, believe it or not, they may not like the U.S., but when things go back, they put their money in the U.S. because they know, listen, you know what? They're the big dog in town, and they've got the wherewithal to hold everything into consideration. So we get a scenario where NASDAQ stays strong while Bitcoin unwinds. This is the core of the decoupling. What does it mean? Well, this divergence is not just a chart. It's a deeper implication. Implication number 1, Bitcoin is no longer digital NASDAQ. I need to understand that. This is very important. Investors can't assume Bitcoin will behave like a risk-on tech asset. Correlation is not causation. You know what that means? Correlation is not causation. Just because each time I see a fire, right? Each time I see a fire, I see a fireman, does not mean that the fireman caused the fire, if you know what I mean. And now correlation itself has broken. Implication number 2, Bitcoin may be transitioning to a macro asset. When an asset stops moving with equities, it may be repriced based on regulation, global liquidity, mining economics, sovereign adoption. This is more like how gold trades independently. So maybe it's becoming like gold. And then application number 3, portfolio hedging assumptions need to change. For 2 years, hedge funds treated Bitcoin as a leveraged NASDAQ trade. The model is now broken, I believe. And then, of course, implication number 4, speculative leverage is unwinding. The speed and depth of Bitcoin decline suggests aggressive unwinding of structured crypto products. This is extremely complicated. there's a lot of people doing lots of different things, and you're out there saying, okay, what's going on? What do I need to do? Well, this needs to be flushed out. So what happens next? That's the question everybody wants to know. Well, we are at a crossroads. That's the way I look at it, right? So scenario A, you could have a recoupling. Bitcoin stabilizes and rebound. As leverage resets, regulatory fear cools, the ETF flows return, and macro condition ease. Scenario B, true independence. Bitcoin becomes to behave like a global macro commodity. And it's not a bad thing, but you need to understand how it trades. Not a tech stock. So its price would then be shaped by sovereign adoption, long-term supply dynamics, political risk, and global savings flows. It's not necessarily a bad thing. It just means that it doesn't trade like it used to, but at least be aware of it. That's what I'm here for. And don't forget to subscribe to the channel because I want to explain to you how these things behave in weird kind of way, And then scenario C, prolonged crypto winter. If liquidity keeps tightening, regulatory battles intensifies and miners continue to sell. And Bitcoin may keep declining while equities remain stable. You got to be careful about that. Take a look at it very carefully. So finally, what I would say is this. The relationship between Bitcoin and the NASDAQ, one of the strongest correlation in modern market, is breaking. It's a divorce. It's actually happening. Look at the chart. And whenever correlation breaks, it signals a major shift beneath the surface. Whether this is temporary noise or the beginning of a new era for Bitcoin depends on global liquidity, regulatory policy, institutional flows, and market risk appetite. So I'm going to keep watching it for you because I want to make sure that my subscribers are fully aware as to what's going on. I want you to understand where we are. I want you to benefit from it. That's what I'm here for. And that's why, I want you obviously to join my channel. But there's a lot of work involved and I'm passionate about explaining to you as to what's going on. There's money to be made. People are making money all the time. Otherwise, they wouldn't be in it. But the problem is that it's a zero-sum game. For them to make money, you've got to lose money. So let's take a look now. And this one is a doozy to really understand what's going on with crypto, especially now. Let us take a look at this. Let's take a look at this. Most interesting. So what are we looking at? Well, as we know, the relationship between strategies of Bitcoin holdings and the market valuation of its stocks and the evolving premium or discount between those two things. The chart you're looking at is a strategies, Bitcoin holdings, and market capitalization. This is getting a little complicated, so hopefully you stay with me on this one. But my subscribers tend to be a bit curious and well-informed. It's a powerful snapshot of how a publicly traded company heavily invested in Bitcoin moves almost in tandem with the crypto markets, except when it doesn't. So it tells us everything about investor sentiment, speculation, and risk. So what the chart shows at a glance. At the top of the chart, as you could see, we have two lines, the orange line and the blue line. The orange line is a strategy stock market capitalization. Strategies stock market capitalization, the orange line. The blue line is the value of all Bitcoin the company holds. So both are shown in a logarithmic scale. Don't worry about that term. But because the value range from under $1 billion to over $100 billion, immediately one thing becomes clear. For the most part, the orange and blue line moves together. But the distance between them expands and contracts dramatically, depending on market psychology. So when the orange line, the market cap, rises far above the blue line, as you could see recently, right? Bitcoin values, investors are assigning a premium to the company. When it falls below, the company trades at a discount relative to the value of the Bitcoin it holds. This leads us to so now we look at the bottom of the chart, right? The lower section shows the net asset value premium, essentially the difference between Strategy's market value and the value of its Bitcoin. Look how green it gets when the orange line and the blue line separate. See how green it gets? The green, premium, the red, discount, and the zero line is equilibrium. So when the stock market's cap exactly matches the value of its Bitcoin. But as you could see, markets are emotional. And those emotions swing widely. So let's take a look at it. May 12th, 2022. 50% discount. This is one of the darkest moments in recent crypto history. The premium plunged nearly 51%. See that little red dot there? Meaning the market value of the company had barely half of its Bitcoin holdings. Wait, you own the thing. You own the Bitcoins. So you should be valued at the Bitcoin. Why did not? Well, there was what at that time the Luna UST collapse set off panic across crypto. This is a big scam. Bitcoin entered a deep bear market. Investors fled anything remotely correlated with crypto exposure. I mean, take a look at Luna UST, but the discount wasn't about fundamental, it was fear. And again, you have to understand that the market is it's a psychological market. Psychological. So the discount, it wasn't about fundamentals. It was about fear. I mean, at the end of the day, you buy or you sell. I decide to sell. That's what happened. So it was fear that crashes valuation far faster than fundamentals justified. Now look at the other one. March 27, 2023. And remember, the reason I'm showing all these bad things, and this is why I want you to join the channel, because what we're after, we're looking after, all the black swan, all the bad things that can happen. How do you make money in the stock market or with crypto? You don't make money when everybody else is buying. It's too late, right? You want to make money when they're selling, right? When they're selling, you're buying, and you have to know what you're buying. And more importantly, you have to be aware of risk. Like I said all the time, when you're crossing the street, your goal is not to get run over first and then to get across the street, not to run across the street no matter what. You'll never make it. We wouldn't be talking today. So that is what's important. You need to understand risk. You need to understand where the risk is going to come from. And this is why I created this channel, which is called the Black Swan, because I want to know where the next bad thing is going to come from so I could avoid it. And by avoiding it, you make money. You could make a lot of money by being negative. You could make a lot of money. Universal, Spitznagel, hedge fund manager, made 4,000% during COVID. How? Well, because he hedged himself against the risk of a COVID-related collapse in the economy, and he was correct. Everything was closed. Back to crypto. March 27, 2023. 26%. Second major discount occurred in early 2023. What happened? Well, there was a banking mini crisis, if you recall, including the collapse of Silicon Valley Bank. Large-scale redemptions and liquidity stressed the risky assets. Bitcoin has not yet entered its 2024-2025 bull phase. The company once again traded below the value of its Bitcoin holdings, reflecting investors' hesitation. This tells us something important. Strategy stock serves as a kind of leverage proxy for Bitcoin sentiment. When confidence drops, the stock gets punished more severely than Bitcoin itself. Imagine. The return of confidence. Now we're back to the explosive premium expansion. Now let's look at the other side of the emotional spectrum. You could make a lot of money in crypto if you time it right. Peak premium. November 2024, 229%. This is stunning. It means investors are willing to pay more than 3 times the value of the company's Bitcoin. Why did this happen? Well, basically enthusiasm heading into the 2024 Bitcoin halving, surging institutional demand, renewed mainstream adoption. We're doing great. We were doing just great. The ETF approval momentum, increased belief that active Bitcoin strategy would outperform passive Bitcoin holdings. This was one of the largest premium ever recorded, a 229% premium. It's fantastic. And then, of course, you have the bull market premium July 16, 2025, 80%. After the parabolic premium of 2024, valuations cooled but remain strong positive. Why? Well, that's the point. Strategy was, the market believed basically that strategy was outperforming mere Bitcoin holding, management decision, likely around acquisition, treasury policy, corporate structuring. Investors preferred buying exposure through the stock rather than holding Bitcoin directly. And of course, we move towards late 2025. And the market collapses. December 1st, back to a discount, minus 10%. That's where we are, right now. After a month of elevated premium, strategy slips into discount territory again. What's causing it? Well, potentially several probable factors. Bitcoin pullback, market exhaustion after long bull cycles, maybe interest rates and macro uncertainty, valuation normalization. But the essential is this: 10% discount after such a long premium is actually mild. Right? It suggests market may be cooling, not panicking. Nothing wrong with that. Interpreting the relationship between the Bitcoin value and the market cap. Over 5 years, we can extract several insights. The stock behaves like a leveraged Bitcoin ETF. Investor optimism is cyclical and exaggerated, and the greatest premium comes when Bitcoin momentum is strongest. And 4, premium crashes usually follow broader market stress. When liquidity dries up, even temporarily, investors abandon proxies and move into underlying asset itself. That's why the red bar corresponds with, in 2022, you have the crypto collapse, 2023, the banking stress, 2025, the correction phase. So why does this matter for investors? Well, we're buying 3 things, right? We're buying Bitcoin exposure, corporate leverage, and market sentiment. This can be good or dangerous, obviously. During bull market, it's fantastic. Premium expands, returns can significantly outperform the Bitcoin, but during bear markets, discount widens. Losses can be deeper and more abrupt. So, as of December 1st, 2025, the company sits around $56 billion of market cap and $50 billion of Bitcoin value. That's a lot. As you could see. So after a massive recalibration, premium wave, the market is now signaling a recalibration, possibly setting the stage for stabilization, return of equilibrium, or depending on macro conditions, a renewed premium expansion. So what does this all mean? Well, what does this all mean? I will say this. as to what does this all mean. You need to understand this market is very, and all markets are psychologically driven. What does that mean? It means that the value of an asset is based on what you think and you're willing to pay for it. What is a stock worth? Right? It's worth what I'm willing to pay for it. And how do you know how much it is? Well, that's a price. Right? The price that you're seeing when you buy a house and you're looking at a house, you're seeing the price of an item. It does not mean that it's its value. Because obviously, when you're buying a stock, right, you expect it to go up. Now, if you believe in a efficient market hypothesis, you shouldn't do that. Because the price that you're seeing, the value that you're seeing is the value of the asset. Therefore, don't try to beat the market. You're not going to do it. And frankly, it is correct. Most investors are not able to beat the stock market. 80% of portfolio managers do not beat the S&P 500, which is a magnificent 7. Why not? How could that be? Well, it's very simple. Imagine right now, it's very difficult right now because right now, what is driving the S&P 500, the market? Well, it's 7 stocks. What's really driving the 7 stocks? Well, it's NVIDIA. Imagine you're a portfolio manager and you have, $100 million portfolio. Now you're up to $200 million. But half of the value that's being created is through NVIDIA. So now, forget diversification. You only own 2 stocks. NVIDIA, a bunch of others, but half of the value is tied to one stock. There is no way an investment committee is going to allow you to basically hold on to the NVIDIA position. That is not going to happen because it's too much risk. Because remember what they said, diversification is good. Really true. Warren Buffett, big investors as we know, he says diversification is like diversification. And I agree because basically it forces you to buy into assets or items that you don't understand for the sake of diversification. And they told him once, Warren, why is it that you're not investing in real estate? You only have BOV, IBM, your own company, maybe 10 stocks. That's not diversification. See, yeah, but I want to buy what I understand. Makes sense. I want to cross the street. I don't want to get run over. Makes sense. Now, I know they're pushing everyone into these market, these indices made up of the S&P 500. Then why not, right? Because nobody beats the market anywhere. But who wants to make 10%? Who wants to make 10%? I mean, take a look. I mean, if you take a look at where the market is right now, okay, right? I mean, year over year, we're up 12%. That's not much. And frankly, other countries are doing much better. Other countries are doing much better in terms of their valuation. Why is that? Well, because, if you look at those indices, you will see that we are up 12%, while the rest of the market is up a lot more. The rest of the world, look at that. Look at that. We're up 12%. Japan is up 25%. Great Britain is up 16%. Germany is up 16%. So the rest of the world is doing a lot better. And that's a problem, right? Because frankly, we should not. But that's what's happening. So how do we deal with something like that? Well, the way you deal with it is that you have to make sure that you actually, get you buy stocks that make sense, right? You need to understand what you're doing Because otherwise, what's going to happen is you're going to have your look at this. Look at this. Spain is up 40%. Italy is up for 30%. So what I'm going to 28%. So what I'm going to do for my subscribers, what I want to do for you and for my my members as well, for my Patreon channel, is I'm going to start looking at what's going on overseas, because look at these numbers. They're doing a lot better than we are. And there is no reason for that. Well, there is a reason. Obviously, they're doing better, right? So what do you do? Well, first, what you need to do, you need to understand what the market is doing. You need to understand what is going on with the stock market and what drives it. And this is my ultimate goal for this channel, right? I want my subscribers to understand what's, or at least psychologically speaking, because you need to understand the psychology of the market. Like right now, what's going on in the market, right? Right now, everyone is waiting for the Fed. December 10th, 2 p.m., boom, they're going to announce. So we kind of know there's going to be a rate cut. Hopefully there is one. Now, if there isn't a rate cut, then you're going to have a lot of disappointed people, and the market is going to have a hissy fit, to say the least. And that's not something you want, right? You want to make sure that the market, you want to make sure you understand what it's thinking. It's like me trying to understand the algorithm for YouTube. You know, what drives YouTube to show my channel to people. It's not like people out there waiting to see what I have to produce. The way it works is the algorithm decides to show, because that's how you mostly look at material, the algorithm decides to show you what they think you should be watching. And of course, you don't watch it and say, well, forget it. But if you watch it, then they show you more of it. It's a feeding frenzy, right? You need to do the same thing with the stock market. You need to understand what is it that is thinking. Because as we've seen, with the Bitcoin situation, is that there's a decoupling going on. Why? Why is the decoupling? Yeah, that's a question. You say, well, maybe it's a temporary, or maybe it's permanent. Well, you better find out, because if it's not permanent, we've seen some pretty nasty drop recently, and you don't want to see that. Now, a lot of people don't trust the crypto. Well, because you don't understand it. Because at the end of the day, you say, well, what is it? It says a crypto. Where is it? Well, if you're not technically driven, it's tough to comprehend it. But you need to understand one thing: is that, well, what is a dollar that you love so much? What is it? Right? Piece of paper. That's all it is. What can you do with a dollar? Well, the reason you know it's something is because it is backed by the U.S. government. And you know that if you go across the street with that dollar, someone will give you something for it. Why? Because that's how it is. Because otherwise you won't be able to operate as a society. So the point being is that dollar has a value. The Bitcoin has a value. The only thing is, I will tell you, Bitcoin technically has more value than the dollar, because the dollar, you could print 10 trillion of it if you wanted to. Nobody could stop you. But the Bitcoin and all the other currencies that we've been talking about, no, you can't do it. You can't do it. There's a finite amount. And that's the beauty of it. Plus, in addition to that, for the Bitcoin and the cryptocurrencies in general and blockchain, it is highly structured and much, much safer than the financial system that it resides on. And that is what you need to realize. And what I want to do is I don't trust the stock market because you don't understand it. And this is what this channel is about, right? I mean, I'm trying to educate as many people as possible, because where are you going to make money? I don't need to make money. Well, I mean, if all you do is working and eating and working and eating and working and eating, the value is being eaten out every day because of inflation. Have you seen the price of food lately? It's a lot of money. So you need to educate, you need to understand what's happening. And more importantly, I want the psychology, the goal of the channel is to explain to you all the things that could go bad. Because that's how you make money. You make money by avoiding troubles. That is how you make money. You don't make money by seeking the height, the beautiful things, right? Too many criminals involved, and in corruption involved also. Well, yeah, in cryptocurrency, but well, forget cryptocurrency. Also in the financial system. Remember 2008. 2008, I hate to remind you of this bad time, but we almost lost the financial system. What does it mean? It means that at that time, the government, the federal government, allowed literally gambling to happen with the financial system. You know, banks were allowed to take on bets that they could not cover. They were betting and were making money on the risk of other companies, literally with credit default swap. They would basically say, hey, I think this company is going to default, therefore I'm going to bet against it. Why? Do you have exposure to this company? No. So why are you doing it? Well, because I'm allowed to do it. And then all these banks did it. Take a look at the movie, Too Big to Fail. All these banks did it. They all kind of went around and did the same thing, and no one knew what they were doing until the whole thing collapsed. And then they went to the people and said, well, you have to pay yourself. Since banks are too big to fail, I can't lose. And pay my bonus in the same way. Are we in the same situation today? And no one went to prison in 2008. Exactly. That's amazing. Now, of course, are we in the same situation today? Because they keep telling you, oh, the market is overvalued. Oh, the dot-com bubble. Be careful. You know, AI bubble. Please, do not listen to that kind of talk. AI has nothing to do with .com. What does it mean? It means that essentially AI, what is AI, right? Is a robot? No, AI is, Tesla is an AI company. Tesla is AI, believe it or not. Why do you think people are willing to spend 170 to 150 times price to earning ratio for Tesla? Because someone out there must see the potential. And NVIDIA is only 38 to 40. The ultimate AI company is Tesla, believe it or not. And that's why it goes up a lot and it goes down a lot. It goes all over because you need to find a way to do it. And that's what they're all saying every day. You know, we're spending too much money on AI. AI is going to collapse. AI, you know what? The more they say that, the better you're going to be. You need to understand that. Thank you very much. Yes, do subscribe. Because we need subscriptions, and likes, most importantly. And exactly, I still figure out how this YouTube thing works, because I will tell you some of the stuff that I see that people are saying, and when they have 100,000 subscribers, I say, where did these people come from? Well, it's just the algorithm basically decides, you know, we need that much material, and then we're going to feed the people that material, and we need to talk about these things. We're going to feed the people that. I want you to be more smarter than that. I want you to look for the information. I want you to understand what's happening. Because if you don't understand what's happening, you will be taken advantage of. Right now, they keep saying we are having a collapse in the AI and it's too expensive, it's too expensive. The money has to go somewhere, right? It has to go somewhere. Where is it going to go? It has to go into AI. Now, when we say AI, is this form of AI or... No, I mean, we're going to look for a way to do it. It's going to be very, very different. It's going to be impactful. But right? So at the end of the day, what you're looking for understanding what is going on. But yeah, I know there's a street I need to cross over. But the more difficult thing to do is the risks involved. And the reason it's difficult for you to understand risk is because they're not telling you what the risk is. Look at the Wall Street Journal. Look at Bloomberg. Look at all, they talk about earnings. They talk about news. They talk about what this guy is doing, what that woman is putting in a portfolio, why they like the stock and why they don't like it, right? It's just talk. But no one tells you the risks involved because you don't want to hear that. Right? You want to cross the street again. You don't want to get run over, but you don't want to know what his likelihood is. I don't want to think that. I want to think positively. Meanwhile, as you're thinking positively, then you're buying the stock and they're making money. And now they're making money because you're selling your stock because you heard that AI is overdone. And we're paying too much. Well, when we say we're paying too much, what does it mean? It means that the P ratio is too high. You're paying too much money per dollar of earnings. But guess what? At some point, these companies, and right now that's what's happening. We have a GDP of 3%. The earnings are going to go up and up and up and up and up, right? So then you don't paying as much. Then the stock is going to catch up. So the P ratio kind of, Tesla makes billions of dollars in EBITDA. NVIDIA also. I mean, NVIDIA is a great company. The only thing is, what do? Well, they just provide the chips. They don't do anything with AI. That's much more complicated. Now, of course, you got Facebook doing something with AI. You got all these other companies doing something with AI. But at the end of the day, are they successful or not? That is the question. That is what you want to know. That is what you need to educate yourself. How do you educate yourself, right? Get a degree? No, the information is out there. The information is out there. It's just that you need to know how to look at it. That's what a channel like this is important because, the thing about crossing the streets. For example, let me tell you something else that's very important, right? Well, how you calculate the odds of something happening. If you have a coin and you keep flipping it, the odds that you're going to get the heads is 50%, and the odds no, that's not true. The odds that you're going to get 50% heads and 50% tail is not true. But why not? I have only two sides. Yeah, but over a long period of time, yes, an infinite. But do the test yourself, and you realize that frankly, one flip of the coin impacts the other flip of the coin, right? They're both impacting. That's a problem. So, my friends, I want you to subscribe to this channel. I want you to join my Patreon channel. I need to make some money out of this. I want the subscribers to understand what's happening. I am here for you to educate you. That is my main goal, and I want you to be aware of that.